Hello and welcome to Ask Slim Live. Today is September 26, 2025. This is a trade planning live event with Slim's analyst team. We got myself, I'm Matt, Arvi, and Katie with us. First, going to go through our upcoming Ask Slim Market Week and live event schedule. You can find this event schedule also on the membership site. So if you are a member, you can check that out. There's an events calendar. So today we have our trade planning live event with the analyst team. Next Friday, we'll have a live event with Slim and the team. And then Friday, October 10th, Slim will do a recorded market week. On the 16th, we'll have a brief from Slim. That'll be an index update. There'll be no market week or live event on Friday, October 17th. And then on October 24th will be another trade planning live event. All of the information that we provide on AskSlim.com or any of our media platforms that we share content or analysis is for informational, educational purposes only and should not be construed as investment or trading advice. Again, today's hosts, myself and Matt, we have Arvi, Katie. This is the professional analyst team at Ask Slim. Together, we bring over 50 years of combined experience as market participants, technicians, and active traders. We love what we do. And our success is your success, or your success is our success. If you want to learn more about us, you can go to AskSlim.com, about Ask Slim. You can meet the team there. We did some interviews with each one of us with Slim, and then Slim back with us. So there's a lot of information there. If you're not familiar with us, if you're newer to Ask Slim. All right, today's agenda. We got three main segments here. We're going to run through the Ask Slim methodology. We're going to do that via member Q&A. Members have a chance to ask us about our process, ask us about specific symbols, and we'll step through that. Then I'm going to do a review of the special. It's actually not level 4. It's level 3 in day trader. And then we're going to finish up with translating technical analysis into an option strategy selection. So I'm going to do an outlook on IWM. And then Katie will illustrate how to leverage those technical insights when selecting option strategies. So that should be a lot of fun, like it normally is. All right, so our first segment, let's jump into it. This is the member Q&A. So if you do have symbols you'd like us to put up live and do a review, this is your chance to do it. I know that we had a symbol or two that came in prior to the event starting, so we'll look at getting that one covered. Otherwise, again, this is your chance to put up a couple symbols if you have them. If you do share a symbol, please let us know the outlook period that you have of interest. If we don't have many symbols, I know we've covered a lot this week, then we'll just move on to the next segment after we cover the first one here, first couple. All right, Katie, I think one came in advance that you're going to review.
Sure. Let me just share my screen here.
Okay, great. I'll stop sharing.
Okay. So someone had requested the monthly analysis for IWM, which is what Matt is going to cover, the weekly and daily and perhaps even the 2-hour time frames a little bit later. So this is the RUT, and this will mirror that. This is the monthly chart, so this will be a good overview. We have a large dominant 78 bar cycle. So that is 78 months. And we have broken down into minor half cycles, 39 bars. And you can see that we likely formed our minor cycle low right here back in April and moved up into the rising phase of the second minor half cycle. We got the reversal scout to switch back positive. This was a relatively steep retracement here. Let me just draw down to the 78.6% fib. So the probabilities would have suggested that we would not be able to make a new high, but sometimes the less likely probability does happen. And just this month, we took out that high from back in November. So being relatively early in this rising phase, we can expect to continue higher. We're just about at this minor 100% extension right here, and that's about 2,600. And then we've got a minor 127.2 up around 2,800. Strong momentum, strong positive price action. This is looking bullish in this time frame. And I'll turn it back over to you, Matt.
All right. Very good review. Looks like we had right now
we had one in Bloom Energy, Matt, as well
Okay.
as silver and gold. I saw that comparison weekly. So let me just get that prepared. Just give me
Perfect.
1 second, and then
Yeah.
I will take over the screen.
Excellent.
So Bloom Energy has had just an absolutely meteoric run. And let's go ahead and show you that, and then we'll hop over to both gold and silver.
Awesome.
All right, so just give it a second. Okay, so this is Bloom Energy. Now you can see here on this run in Bloom,
Wow.
25 to 85, basically nonstop. And then look at this weekly bar, 87 to 61. So, you know, you can say this has been a wild ride for sure. There's a low that is due somewhere around year end. Okay, so we hop over to the short term. This low formed on time. This low, there's actually one due shortly here. Now, based on where we are here on the weekly cycle, which is obviously now had a huge run, the highest odds really would be for a rally, and then you have to watch to see, does it form a lower high versus that old high or not? I would say that, you know, that would be the higher odds play, and then for this to roll back down, and you can see that the trough here on that next cycle is due out somewhere around year end. So a move up and then watch to see if it can fail, then move back to the downside one more time into year end. If we hop over now to the shortest time frame here, you can see this is actually trying to form that trough. It has not yet done so, but keep it on your radar here in Bloom Energy. Actually, quite interesting. Let's go ahead and pull up the silver and gold weeklies only. So we'll pull that up and overlay the drawings here. Okay, so this is GC, been on a huge run higher. You can see that really clear move out of that zone. Let's see if we can redraw that right there, up and out. And on the upside, you can see our zone here from around 3,900 to as high as around 4,100 here on the upside in GC. And then you also asked about silver. We can go ahead and pull up silver. Also in a very strong overall move here. What I want you to see in silver, this is interesting. Look at the angles starting to change here, right? And now we are in, you can see we are going straight up, right? The angles are changing. So we are in blow off mode here, at least for the shorter time frames in silver as we are moving up. So how high this can go, you know, nobody obviously knows. But these are our levels. We go ahead and let me just get the just hide it 1 second so I can see the actual key swing low, swing highs. Okay, so that's the actual swing low. That's the actual swing high. So you can see right there, 46 up to 48.60. 48.60 is still a reasonable area here on the upside for this to rally up to prior to forming any kind of high. So very, very strong action here in silver. Let's go ahead and overlay the drawings again. You can see very, very strong move, and that is still really in play here to the upside in silver as well here on the short term. Okay, so I'll go ahead and hand this over to you, Matt.
All right. Good analysis. Really good. Very interesting to see that.
For sure.
Okay, so I'm going to jump back into the next segment here. This will be a brief segment. Just wanted to provide a reminder that this is the final weekend for the Ask Slim Day Trader Service and Level 3 special offers. So that'll end on the Sunday. If you aren't familiar with where those offers can be taken advantage of, you can go to the site and click on the link up there in the right hand corner, and then there's an overview of both the Day Trader Service and the Level 3. So those are both running right now, expiring on Sunday. And with the day trader service, it's for 3 months, 25% off. It's only $99. It includes a 14-day satisfaction guarantee. So essentially, you get to try it risk-free for 14 days. We're very confident you will find a lot of value in the day trader service for intraday swing traders in particular. And then also on level 3, we have the special running 35% off for your first 3 months. It's $232. It's quite a savings there. And level 3 really gets you an extremely broad amount of technical analysis coverage that the team does. And we look at everywhere, anything from the major markets to the key ETFs to the high flyer stocks, and also taking into consideration member requests that come in. We look at the cycle timing through our focus list. We have over 80 symbols in our focus list. Katie manages the cycle timing aspect of that. And then we have our Discord channel where you can connect with the analyst team. And RB prepares an office hours recording just about every week, where you have a chance to ask about symbols again and see the process in action. And then he formulates trade ideas. So you really, really get a chance to get a combination of professional analyst team, how we go about our work, and then as traders, how we put together our process and all those components that go into that. So it's one heck of an education, as well as real-time information in terms of helping to build out your plans, your decision-making process, and just saving you a ton of time, because you have a professional analyst team doing this work on a daily basis across all these markets and providing that. So it's really, really a time saver, and it's just fantastic to be able to know that you have a team like this behind you. I know that I enjoy it greatly when the team posts specific information like we just did. And as a trader myself, it really does help save you time. And that's what you need. You need to be able to have a way to filter through information and see what those setups look like that are going to give you the best odds for a profitable opportunity, or at least mitigate your risk. All right, so those are the 2 specials. I'm going to do a tour after we conclude this live event. So if you want to stick around, and if you have any questions on either of those, or just want to hear me talk about some of the trade planning opportunities that come with these services, I will jump into that for a few minutes after we conclude the event. Okay, so we're going to move on, and this is going to be essentially our last segment here, unless there's questions that come in to the Q&A, and feel free to share some if you do have them. But this segment is translating technical analysis into option strategy selection. So I'm going to do a technical review of IWM, and then Katie's going to help use her experience and professional knowledge and expertise around option strategy development and take those technical insights that I'm going to share. We'll probably have some back and forth, and she's going to come up with some strategies that we can consider given the overall technical conditions of IWM. And I'm going to jump into it right now. So I'm assuming you can see my screen. Just give me a thumbs up if you can. Okay, good. Thank you. So I'm going to start over on the left here, which is our weekly chart, because I always want to get a bigger picture. And Katie really gave us a bigger picture with that monthly analysis, which is so helpful too. So on the weekly chart here, we're obviously in a overall bullish condition. So the intermediate weekly chart condition is positive. What is telling me that? Well, obviously, it's pretty clear that we've had a significant uptrend since the April low. Our reversal scout on the weekly has been green or positive the entire way. And the pullback that we did have into that minor time frame here that came, you could either call it here or here, but those 2 swing lows did not do any damage to the overall technical picture. And then we continued that advance and sort of sneakily, quietly made a new all-time high in the Russell 2000 or the IWM. But we have been talking about here at Ask Slim that change in the money flow pattern over into IWM now for, I would say, a good few months. And RV always keeps an eye on that index. Okay, so let's just talk about the key levels here. And it's always important to do these draws because this is where traders are looking to put money either to work or take some risk off. So I'm going to do a couple draws. As I mentioned, we could call this a minor intermediate swing low here and then another one here. So if I draw the other one, this gives me some perspective. So what you can see is that when I drew this more, I would say, pure technical swing from the cycle low to the cycle peak, then back to this trough here, that gave us a 61.8 fib extension, which we hit this week, and then we sold off a little bit. So we're in the midst of a pullback from this pattern structure that developed from this April swing low or cycle low up to the peak here, this minor peak, and then that pullback, and that gave us that 61.8. So the way I see it right now is that we are entering into this probably a choppier period right now as you get into a period of risk on the weekly. That's what this is telling us right now, is that we are entering into that cycle low timing window. So we would watch for a low to form here over the next several weeks. And so we could see a choppier period. I mean, anything's possible in terms of and we already have a right hand translation. Could it continue? Yes. But you'll see when I get into the daily and then the 2-hour chart that it's got some work to do here, at least in the near term, in terms of resistance to give us another leg higher. So what would be that next leg higher? That next leg higher is somewhere right around that 251.5 area, 251 and 251.5, which is the 100% extension of that other swing high, swing low, or swing low, swing high, swing low structure here. Gave us that target. So that would be the next upside target on the intermediate time frame. As long as we don't get a weekly close below this intermediate minor 61.8, that's my line in the sand for this overall pattern structure, then the upside, as also Katie reflected in the monthly analysis, suggests we have higher prices likely to come. So that's my key line in the sand in terms of a structural damage to the IWM. Otherwise, I would assume and expect, based on this overall current structure, that we would hold in this intermediate support zone that runs from about 235 then to about 225 and a half or so. So that's the intermediate picture. Now, if I come back to the multiple time frame, I'm going to look at the daily here. So the daily, we're really right now, we're sort of in no man's land. So what I have on the bottom here, I've overlaid, Slim has put together, the green dash represents the daily cycle bracket money flow for the SPX and NDX. I always like to bring in the minor cycles. For me, it just helps to give me some additional context. And then the black cycle bracket here is for the Russell. So what's important is that you can see that there's a cycle timing window right that we're entering, essentially starting next week. So that would tell us that there should be a low that forms, something like a retest, unless we get an early low. What would tell us that we already had a low potentially is if we broke out above this key near-term resistance zone. If this key near-term resistance zone holds, then that would suggest that we're going to pull back, likely find support in this key short-term support zone, and then look to attempt another move higher. So right now in the near term, we have a battle going on between the bulls and the bears, where you have a negative condition in the near term, which is also fighting against itself, because in the intraday now it's showing more of a bullish. So it's very choppy right now, which makes sense as you get into this cycle low timing window. So the near-term outlook over the next, let's say 7 days, 10 days, could be choppy. We could get a rally in near-term resistance zone, and then we get another pullback. That could be the case. If we get through this resistance zone, then the probabilities could increase that we've already seen a low, because we've tagged the 21 EMA on the IWM here, which is usually a place where you'll find some support, which we did from yesterday. It could mark a trough, but again, we won't know until either we break out or we get through this period of risk here. So we have choppy going on right now in IWM in the near term. Intraday looks a little bit more positive. Watch this key near-term resistance zone. If we got up into this zone, if I'm a near-term trader, what I'm watching for then is the reversal scout in the 15-minute, especially the slim ribbon. Let's call it the slim ribbon. Would tell me that we're likely rolling over and that we have our peak. Right now we have a peak warning, but if we get back up in here, roll back over, that could get us into deeper into this support zone. If we get above that resistance zone, then the next target is up here around 251. So that's the intermediate, the short term, and also the near term look at IWM. So Katie, try to take all of that and see what we can do in terms of some strategies.
All right, let me share my screen and we'll
All
go
right,
over
great.
to Tasty Trade. This is a time frame that is very tricky to trade because
Right.
let me just see if we can get this here. Because you are entering a period of risk on both the weekly chart and the daily chart. So we have a somewhat bearish hypothesis for that. However, we have very strong positive momentum, a long-term condition that is very bullish with strong momentum that may prevent too much of a decline. So, but we're not going to trade the very long term. We're going to look at two different time frames, 7 to 10 days, and that basically is covering the daily cycle timing window. And we're slightly bearish in that time frame. The other is 3 to 4 weeks, and that kind of encompasses the rising phase of the next daily cycle, wouldn't you say, Matt?
Yes, exactly.
Although that cycle is also in sync with the weekly cycle timing window. So again, it's bullish in that time frame, but slightly so. So this very tricky to trade these conditions. Let's start with the near term, which is 7 to 10 days. And we're going to talk first about the short premium strategies that we usually cover in these segments, which is the credit spread and the iron condor. Both of these strategies involve selling out of the money puts, out of the money options, and then buying further out of the money options to define risk. And because these options are all out of the money, they have no intrinsic value, only extrinsic value. And extrinsic value is essentially time value. More time to expiration means more value, and vice versa. So using a 7 days to expiration cycle will give us less value than using a 10 DTE expiration cycle. And let's demonstrate this. It might seem basic if you are an experienced options trader, but it's important, especially when trying to do short premium strategies in near-term expiration cycles. So we're slightly bearish in the 7 to 10 day time frame. If you're doing a credit spread with a bearish hypothesis, that means a short call spread. Buying a call is bullish, so selling one is bearish. And let's start with 7 days to expiration on Tasty Trade. The days to expiration are right here in the middle. Let's start with 10 days to expiration. And let's see what were our levels. Matt mentioned a reevaluation at around 245. So let's go and sell the 245 call. And now this is a naked short call, undefined risk. To make it a credit spread, we go further out of the money and we buy a call to define our risk. So you can make yours as wide or as narrow as you like. I'm going to demonstrate a $10 wide spread, so I will buy that 255. And you can see that we collect $1.07, or 9, somewhere in there. Let me just lock in a price so that we can talk about it. So this is our max profit, is the credit that we collect. And our max loss is the difference between the width of the spread and the credit collected. In this case, that's $891. So let's see the 7 days to expiration cycle, and you'll see what I was just talking about before. Less days to expiration is going to equal less credit. Now, very easy to switch on here. You just click this expiration button, less time, and you can see that we have gone to 7 days to expiration. Our strikes are the same, and we collect 91 cents. Okay, so that is obviously not a very good credit collected. There is some people that want to subscribe to the theory that you should collect a third of the width of the strikes, which would be over $3. So neither of these would be really great. So if you are one of those people, then you could just slide all of these closer to at the money. 241 is at the money, and you will see that you will collect a larger credit, $2.50, and that makes this much more directional. You really you have a buffer of the credit collected, so your break even in this point, if I just lock it in at $2.50, your break even to the upside would be 243.50. We can go over to the risk graph and take a look at that. Or not. Oh, sorry. I just need to move over curve view and active. Nope, it's not going to show us. Okay, but you can see that where this green line is, here it is, where this green meets this red, that is our break-even point, and that would be 243.50. So you have a very tiny little buffer. Obviously, if you move this further away, if we move it out back where we had it, now you have a little bit more room, but you're not collecting much credit. So that is kind of the give and take. And not being able to collect a lot of premium in near dated credit spreads is quite common, especially in low volatility environments, because that is another thing that affects the value in all options, not just out of the money ones. Higher implied volatility means option prices have more value. So if we look up here in the top left corner, you can see IV rank, that's 13.8. That is quite low. And if I close up this expiration, you can see the implied volatilities in these expiration cycles are in the high teens, low 20s. So that is also affecting our ability to collect a decent credit. If these numbers were high, something like Oracle, which has a similar price, 284 to whatever IWM was, what was it, 240? So quite similar, but look at the IV. It's 59.1 for the IV rank, and these expiration cycles have implied volatilities in the 50s. So you could use a near dated expiration cycle and collect a much more significant credit. Now let's go back to IWM. And we're in that 10 days to expiration. And let's see, let's put this back to 245, 255. That was where the reevaluation level was. We're collecting just over $1. So something that you could do would be to turn your credit spread into an iron condor. And so we sold a call spread here. To turn this into an iron condor, we have to sell the other side too. So we add a put credit spread. Now, Matt mentioned a reevaluation level around 233. So let's sell the 233 put and then keep it symmetrical. We'll go $10 wide and we will buy the 223 put. And that will help us collect a little bit more credit, just shy of 50 cents more. But the problem with this is that it adds risk. So whereas with a call credit spread, you only have risk to the upside and just profit potential all the way down to zero, with an iron condor, you have both upside and downside risk. And I can show you that here. And let's zoom in a little bit so you can see it. There's risk on the downside and there's risk on the upside. So if IWM were to stay in this green zone here, then your profit would be max 154. But if you were breaking below or above those break-even points, then obviously you have loss. So another thing that you could do is move all of these strikes towards the money, and that will help you collect a much bigger credit. I'm going to show moving this iron condor right to at the money. And what this is called an iron fly. So it's basically an iron condor with both the short strikes the same. You can see that your credit collected is much bigger. It's about 50-50 at this point. So you collect $5.05. Let me just lock that in so that we can talk about it. And your max loss, so 505, your max loss is 495. So in return for this larger credit collected, you are reducing your probability of profit too. So here's what this looks like. And you can see that it is slightly directional. It has a negative delta, but it's basically a neutral trade. And maybe you would do something like this if we are kind of in no man's land. What do you think of this, Matt?
Yeah, no, it's very interesting, Katie. That one actually nails it in terms of what the analysis is suggesting right now, right? I mean, you always have to look at what's the data, what's the market telling us right now. And right now we're stuck in between key near-term resistance and key near-term support with a bullish, a longer time frame bias. And then at the moment, the 2-hour chart's telling us based on momentum, we have a negative bias, and then getting into the cycle low timing, which would suggest then that you have negative money flow pulling on you. So that's why I'm seeing the tug of war. And so I think that that's a very interesting strategy that you just put together there.
Yeah, you have a greater profit potential right here in the middle. If it does blow through your strikes,
Mhm.
your break-even points, then you have a less loss potential, whereas
Sure.
the other one was $800, $900. This one's $495. It doesn't quite cover your downside support zone, but it
Hmm.
does cover that
It
upside
covers a lot of it.
resistance.
Yep.
Yeah, it
Right.
covers quite a bit. So, that's, as I was mentioning, one of the problems with the near dated expiration cycles in symbols that have low implied volatility. You have low implied volatility that's keeping the options prices suppressed, and you also
Hmm.
don't have a lot of time, so there's not a lot of extrinsic value left in the options. So for near dated environments, I generally prefer long premium strategies like a debit spread or a zebra, but those
Hmm.
are very directional
Sure.
strategies. So
Right.
if we're bearish, I can demonstrate one of these. If we're bearish, we would use a put debit spread, buying an in the money put, and then selling an out of the money put to reduce our cost basis. So I bought the 245 put, sold the 235 put. Again, this is something that you can make it wider or narrower, it just depends. And what you try to do, here's your max profit and your max loss, and you can play around with these strikes because what you want is to get that ratio as close to possible as 1-to-1, and that is basically it right there.
Mm.
So you would have a debit of $4.96. That is your max loss. Your max profit is going to be the difference between the width of your spread and the debit paid. So in this case, that's a 504. And here is your risk graph. Now, as you can see, it's very directional. If
Hmm.
it goes up, you're losing. So that is if you're, a little bit uncertain and you want more flexibility, then the iron fly might be something. If if your hypothesis is more directional, then this might be something you would look at. You have an increasing profit potential up to your short strike, and then above your short strike, you have your max profit. So, but it is capped. So that's kind of one of the differences between a debit spread and the zebra. The zebra has no max profit. You have increasing profit potential all the way down to 0 if you're using puts. So I can show that too. So we would use puts, and the at the money, I have extrinsic value loaded right here into this column. It makes it easy. The just out of the money put has $232 of extrinsic value. So I want to buy two puts that have about half that. So that would be about 115. Let's go right here. And I'm going to buy two of these, and then I'm going to sell this one. And so we want this extrinsic value to be as close to zero as possible. So right now we've got negative 24. If I move this, this is still closer to zero. So this costs a little bit more, $663. That is your max loss and your capital requirement to place the trade. But here you have, if you just get an absolute like wipeout to the downside, you have no maximum profit potential. It just keeps increasing all the way down to zero. So that is something that you could consider. But again, as you can see, it's very directional. And the same principles apply for the longer durations. If you have a 3 to 4 week time frame, you can simply use those expiration cycles. But in that time frame, we are slightly bullish. So remember that debit spreads and zebras are very directional. So you may wish to wait for an entry when the daily cycle low forms. And then if you're bullish, you use calls instead of puts. A debit spread would cost the same. The strikes might be different, but again, if you're doing $10 wide, you're trying to move those strikes around so that you can get a 1-to-1 ratio. So you should be always spending about $500 on a $10 wide debit spread. The zebra is going to cost more because you've got more extrinsic value to cover. And then, of course, with the short premium strategies, you are going to collect more credit because you have more time. Is there anything, Matt, that you wanted me to show in particular with the longer dated expiration cycles?
No, I think you really explained it well, giving all of the different scenarios of what the logic is for each of those. So I think that's extremely helpful for those that are, whether you're experienced or wanting to learn about option strategies and how you connect the dots in terms of the analysis. Then that analysis helps to then drive that decision-making process on the option strategies. So the only thing I was gonna is just help with real quick, and the both of you are welcome to jump in on it too. If you can see the screen back on IWM. But Katie, when you talked about, let's say, more of a directional decision right now at the moment, so we always talk about like what's happening now, and right now we have that sort of that tug of war in no man's land, and that's why I like that iron condor, that fly version. And then in terms of the bearish near term opportunity, it's really not presenting itself at the moment, because if you look at that's why we use multiple time frame analysis at the moment. You on the 15-minute, which is part of the near term decision making, you have both of our momentum indicators are positive. So it's not a time right now that I'd want to enter. I at least would want to see one of those two indicators roll back over. That would give me a little more conviction, as long as the 2-hour would stay negative, because we're just entering into the, let's call it the slim ribbon resistance area here. And if we peaked even if we peeked our head up a little bit into there, or tagged that top of that near-term resistance zone, and then rolled over, that would be more the entry that I would see for that bearish, more directional strategy. And then in terms of the directional on the slightly bullish side of things, depending on your style and in terms of position sizing, and if you're scaling in, I mean, when you tag that 21 EMA, it could have been the quarter or third of your initial position, and then as Katie mentioned, you're really watching, because there should be some volatility as we get through this cycle low timing window, and you're monitoring that for the indication that a low has formed, where then you would start to really build your position more in force. So that's the way that you approach all sides of it. You let the charts really tell their story, do the talking in terms of what's happening, and then from there look to build the strategies around there, making sure. I think really what Katie helps us to understand too is that there's certain ratios that you want to look for. And I think that's really important to be aware of, not just sort of willy-nilly going in and buying a strategy. You want to understand what puts the odds in your favor, not only from a technical perspective, but also from building out these option strategies. Would you agree with that, Katie, that it's important to understand
Absolutely.
those? Yeah.
Yeah, absolutely. Because, you have to be aware of the fact, for example, I'll just use what's on the screen, IWM. We're in no man's land. We'd like to be kind of, bearish, neutral. However, and that would imply a short premium strategy. Short premium strategies, if you're doing something out of the money, it requires theta decay. So you might be correct for a little while, but you're going to have to allow the position to decay. And so, that's another factor that you have to consider, is that you might have to hold on to this for a while, especially with a fly, because those options are at the money and they are not going to decay until the very end. So you need to be right the entire time. It's much easier to be, quickly right and take a profit with a long premium strategy. But again, those are directional. So, I guess the theme here is that it's best to wait for a really good entry point, and then, you really are putting a lot of odds in your favor, not just with your strategies, but directionally. And it's easier to tell when you're wrong.
Mm-hmm. Very good. So it looks like, Katie, there might have been a question that came in. The question is, would it be better to initiate the 10-day out position now, or wait till the price enters the resistance zone, given it's a bit far and the 15-minute is still green?
If you were doing a long premium position, I would wait for that entry signal. If you were doing short premium and you were willing to give yourself room and accept less of a credit, then you could do that. I certainly have done that in the past, but you have to really watch your risk management, because let's say that you put in the bearish option position 10 days out. You do a short call spread and you put it 10 days out. If you're getting close to breaking out through that resistance, where, for example, Matt had his reevaluation level, you're already going to be showing quite a loss, because you're basically at the money at that point. So you really need to have good parameters and control of your risk management. But certainly, if you give yourself enough room, take a little bit less credit, and you're fairly confident in your direction, then I wouldn't have a problem doing a 10-day out now, for example.
Okay. Well, it looks like that's the final question on this topic. So I appreciate your insights into it, Katie. It's always fun to do these segments together. And I don't know if there's any other questions that came in.
Yeah, there were a few, Matt.
Oh, okay.
META, Costco, and U.S. Oil. I don't know if he or she is talking about CL or something else, but we can highlight those, right?
Okay, great. All right, then we'll wrap it up after these three.
Yeah, sounds good. So, Katie, I will do two of them and then send it over to you, okay?
Okay.
All right, so let's pull up U.S. Oil. So I'm assuming that you're highlighting CL, so I'm just gonna be showing you CL. Um, so for CL here on the intermediate term, you can see that there's this low that's due right about here, and we're looking for this to actually give a move back to the upside. The actual trough, meaning on this really long blue dominant cycle, right, which has been clear for a long time, is not due until Q1 of 2026. Now, in the short term, what are we looking at? In the short term, you're looking at this really holding sideways and is now given a move back up. So if this can move over the 78.6, that would be positive, and then say that there are I would say higher odds of a move back towards that old high around, let's just say, 69.20-ish. So interesting pattern in the short term, clearly moving back to the upside there. So if we then shift over to META, Meta's been acting fairly weak. I've had that on the radar to the short side and has been continuing to act weak. There's a trough here that's due. I am looking for one more move back down into that low, and then for it to turn up after that. In the short term, you can see that there is not a low due here quite yet, so I'm going to be watching for another move back to the upside, and then for this to fail and then turn back down again one more time here in META. So certainly an interesting one on the short side, and I'll go ahead and hand this off to you, Katie. Okay. All right. So let me see if I can pull up Costco. I think.
I'm back. I
Okay.
lost the internet for just a moment, so if you lose
Gotcha.
me again,
All right.
then
No
take it
problem.
over. But I
All
have
right.
Costco ready to
All
go.
right.
I
All
apologize.
right. No problem. No problem.
Okay, so here's Costco, and this is the monthly chart. I wanted to start with this because it's very interesting. We are about to enter the monthly cycle timing window next month. And so I have a projection here. This is the 23.6% fib. We've already gotten just below it and sort of bounced off of it. And maybe we get even lower down here to about 810, let's say. So this is negative momentum. So keep that in mind as we switch over to the weekly chart. Weekly chart, we've got cycles here that are 36 bars in length, and we have a timing window that's due out in November, December timeframe, probably with earnings here. You can see that momentum turned negative. We got down under the support zone when we made this minor cycle low. Then it turned positive, but quite flat. And now we are turning down again. So we would expect rallies to fail into this time frame, especially considering the situation on the monthly chart, which is dominant, and this weekly chart with negative momentum. I would target this area if it just wanted to chop around now, which is probably right around that monthly 23.6% matching with this, right around 913.5. Lower than that, this cycle low support is down around 870. So then over on the daily chart, ooh, this needs an update. We had earnings, didn't we? Yep. Okay, so I will lower this resistance zone, and then we have a timing window that comes up between 10.7 and 10.16. Momentum is negative. I'd expect any rallies to fail going back into this. This cycle out here is in sync with the weekly cycle timing window. So I would not expect much in this next daily cycle. Once we form a low in here, maybe a small bounce up into a resistance zone that will be created once we have the daily cycle low in place, and then for moves back down into all of these synced timing windows. I would expect, so I've got this pointing to like the December, January timeframe for a low to form here. So out in the beginning of the new year, I would expect Costco to be able to do better. I think that was the only one I had, right, RV?
Yep. Yep.
Okay, great.
All right. I think
Looks like there
that's
was just one final question, which was on the 2-hour chart. There, they see the yellow horizontal lines, and those are high-low markers for the daily. You can set those to time frames of your choice, but on the 2-hour that you saw on IWM, which I'll just grab back really quick, those were daily high-low markers. So it marks the daily high-low, so you can get a sense of how the trend is tracking based on those high lows and where you are in sort of real time relative to those highs and lows. Okay, well, I think that wraps up today's live event. We appreciate everyone for joining us. And final reminder that We have 3 days left for our day trader service and level 3 special offers. And if you have any questions on those, you can reach out to me. If you want to hang around, and I'm going to do a brief tour of both of those services and do some trade planning, live trade planning examples using our tools. Feel free to hang around. And thanks again to Katie and RV for participating today. Again, this was the analyst team and our live trade planning with Matt, RV, and Katie. And we'll see you next week with a Market Week Live, and Slim will be joining us as well.
Have a great weekend, everybody.
Take care.
Thank you, guys.
All right. If you're hanging around, I'm going to jump into a review of the day trader service and level 3. We'll do some quick tours of those services, and I'll do some example trade planning. So if you have a couple other symbols that you wanted me to review, whether it's from a day trading perspective, intraday swing trading, or from a either near-term, short-term, intermediate time frame, feel free, and I'll show you how I would walk through those using our tools. So first, I'm going to look at level 3. We'll look at the level 3 dashboard. And I'll pull that over right now. So even if you are a current Ask Slim member, sometimes these reviews are very helpful. So on the level 3 dashboard, which is right here, there's a classic view that's got all of the areas of the level 3 membership that you can go to, but then we've organized them into sort of action items. So if you're looking for the indexes, major market sector analysis, all of that information, the reports that we do, the videos that we do relative to the indexes and major markets, sector analysis, all would be in this area here, which there's a lot on a weekly basis that is posted. There's a daily snapshot. There is a weekly Future Speak video, which steps through major markets that RV puts together based off of Slim's and his analysis. So that's a very enlightening video. And then there's Slim's most notable report. And with the most notables, that is a summary that Slim will do after he does his analysis on the charts. He'll step through the various segments of it then. So he'll look at the indexes, he'll look at VIX, treasuries, FX, metals, oil, natural gas, foods, cryptocurrencies. So he'll step through each one of these and give a technical synopsis of what he viewed when he went through the charts. And as I said, then you'll see the video presentation of that from RV in the Future Speak video. And then there's also office hours with RV. And that is an opportunity where on Discord, I'll pull that over right now. So on Discord, you have a chance to see RV's office hours. He has a Q&A where members can request symbols. So on any given week, there's somewhere between 10 to 15 symbols that RV will cover, and those are based on member requests. So if you're a premium member level 2 to level 4, you have a chance to submit a symbol that he will review. Now the review is done in a video format where he'll walk through the symbol, weekly, daily analysis, and then talk about what he's seeing from a trade planning perspective in those. And then also there is the opportunity to see the archive of the videos that he has done. So there's a lot of good teaching instruction that goes into it. There's charts that are posted. It's really, really an awesome interaction between our members and RV, and you get to see a professional analyst and trader work through their process. Same with the trade ideas Q&A. So this is, in a way, RV's blog. So again, the process of being an analyst, the process of being a trader, he steps you into his world, and you get to experience how he's tracking the markets, how he's scanning for opportunities, and then sharing what he's seeing, and back and forth that members get an opportunity to have, and then posting of ideas. So there's the Trade Ideas feed, which is just RV sharing the ideas that he's seeing, putting them up on the site with videos to give you some instruction around them. And then also if there's the questions that members can ask, they can do that right inside of the Q&A channel. So that's a great opportunity as part of the level 3 membership. I mean, there's so much, as I said before, that is available with that level 3 membership in terms of analysis and then trade ideas, being able to see our process, see the charts, so much here that is helpful. We try to save you time. So if you have a specific market that you're interested in, you have the ability, for example, with our Future Speak video, where you can go exactly to that market that you might have an interest in. So energy futures, currencies, metals, treasury, stock indexes, grains, foods, crypto. You can go right to the place in the analysis, to the segment of the video where RV does the analysis, click it, and it will open up to that segment. So very, very efficient, very, very effective approach to being able to get the analysis and work off of it. So that is part of the level 3 membership as well. And I'll get back to the overall dashboard here and keep going. Again, with the charts, we have live and streaming charts. So there's like, if I click on chart streams here, this gives you an opportunity to see a number of the major markets in live time. You basically can click on the symbol, and that takes you into a streaming environment where we have a media platform, and you click play, and it's going to then show you from left to right the multiple time frame analysis that then you can track, excuse me, in real time by simply clicking on that. So that's an opportunity for you to experience the analysis and the indicators in real time as a level 3 member. Obviously, as a level 4 member, you can directly get these charts and import them into your own TOS platform. But as level 3, we give you a taste of it so you can see what that might look like. You don't get to directly have access to these, but you can see our charts in live time. And then we have opportunity through Discord to answer questions that you might have. We also have a playbook that we built in the usability resources area where we step through each of the indicators. And then also, as I said, we have, so there's an indicator glossary. There's also a playbook that's for the near term, a playbook that's for the short term, where we talk about the grid itself, what the indicators mean, what these setups can look like in terms of like a momentum continuation setup, what that looks like when things are shifting, how the indicators are reacting as the market changes, and what that can mean for potential setups and opportunities. This was a very comprehensive usability area that you can utilize. Okay, so that was chart streams. So again, with level 3, you can get access to our static charts, and then we have our chart streams. And then there's also, with a lot of what we do, there are videos that come with the static charts. So you can watch the video, and then we might post those charts as well. And then also there are, for our level 4 plus membership, which is higher than level 4, you can request symbols, and you're guaranteed to get 2 symbols reviewed by the analyst team, a maximum of 2 per week. And with the office hours, it is more of it's first come, first serve. There's a cap on it. So with the chart, level 4 plus chart requests, you can ask for up to 2 per week, but you're guaranteed to get those within 24 to 48 hours, a review of the daily cycle and weekly cycle analysis. But the cool thing as a level 3 or level 4 member is that you can track those. So as our level 4 plus members ask for these symbols, you can also get to see them. So that is I find that super interesting, because it's always great from 2 perspectives. One is, what are other members looking at? Because they might be spotting something interesting. And then also, how does the analyst team then put together the analysis on it? So I find it fascinating, the combination of both the members who are requesting the symbols, and then also the analyst team then who are putting their technical analyst hats on and doing the review on both the weekly and the daily charts. So it's really, really cool feature or service that comes with level 4 plus, but then the level 4 and level 3 members get to benefit from that. So that is part of the level 3 membership as well. And then directional bias tools. So for us at Ask Slim, understanding directional bias is paramount. We believe that the trend, the structure, the pattern structures, the cycle structure, all of what helps to get momentum, the momentum analysis to give us a sense of where are we in terms of the directional bias, because the directional bias really should drive your decision around your position bias. So what's your posture? Are you looking to be long, looking to be short? Are you neutral? And then also with the cycle analysis comes timing. So we have to not only understand the directional bias, but also the maturity of the move. Are we in the initial rising phase of a new move? Are we in the meat of the maybe there's if we're talking about a bullish sort of setup, then are we in the, if I pull up this one here as an example, this was from earlier BE, I know this one really was a flyer, but let's just talk about this in terms of understanding the phase or maturity of the move. So we have a pullback here. You can see, so I have multiple time frame analysis here, or that's going to happen. So from left to right, you have the weekly, daily, 2-hour. And if I'm a near-term, short-term trade, or even an intermediate time frame, understanding where you are on the 2 hour is important, because a lot of people say, man, geez, I never got that pullback that I wanted. How could I ever buy this thing? Well, you've got to understand where you are in the phase and also the type of move that you're in. And so this was an extremely strong move, and our indicators are going to help with that. They're going to help tell you that this is a screamer on the upside. And the slim ribbon, the reversal scout, both of them stayed positive the whole time. But then in the 2 hours where you get your wiggles, where you get a chance to re-enter. So even though the daily chart, so if you just stared at the weekly daily, you might say, I never had a chance to enter. Even though if you've done this long enough, you see that the slim ribbon provides you with cues or clues in terms of these little pullbacks. And when you touch into the middle part of that slim ribbon, all things considered, meaning the rest of the overall picture stays positive, then it gives you these new opportunities. And that's what the slim ribbon PO is calling out. This is the most fantastic continuation indicator I've come across that Slim built and RV built that helps to give you continuation opportunities. So for those people that say, geez, I never saw another opportunity to enter this thing is screaming to you 1, 2, 3, 4, 5, 6 times that there's new opportunities for continuation on the upside. There's another one here that it did fire, but again, this was a pretty steep correction or pullback that had happened. But anyways, coming back to the 2 hour, you can see we went neutral in the slim ribbon, then we went negative in the reversal scout. Once those both committed to the positive again, they went back, shifted back positive. That's your buy signal that would suggest, okay, probability is high that there's another up move likely to take place. So all of the indicators we put on these charts are not here for show. They are absolutely here to tell us something in particular, whether it is bias, whether it is pattern structures, whether it is maturity in terms of where are we in the move, and buy, sell signals in terms of continuation opportunities. All of this helps to put that picture together. The MCI here on the bottom is all about helping us understand whether we have a positive, negative, or more neutral condition. You can see here. So this is an indicator that is the combination of several different time frames, and it has just stayed positive. It stayed positive this whole time. So again, understanding directional bias. What tools do you have to help you determine what that directional bias is? What tools do you have to help you understand where are you in the move in terms of the maturity of the move? And then using multiple time frames to give you the new opportunity or the clues into as things change. So that's what level 3 is really going to take you into, this world of analysis, trade planning, execution, talking about all that whole trade setup lifestyle process that you need to have. And then in terms of bias, we have the market conditions monitor. So that is a tool that is in live time where you have an opportunity. Here it is right here, Whereas a level 3 member, you get the short-term, near-term, and intermediate time frames. And what I like to do is I go to the intermediate time frame and then I'll sort, okay? And I'll look at the either bullish, very bullish all the way to bullish conditions. And there's so many very bullish right now, as you can tell. And then I'll go down even to slightly bullish. So slightly bullish all the way to very bullish. And then I'll want to see if there's these same symbols are pulling back, let's say in the near term, like I just showed in that BE. So if you have a pullback in the near term, let's bring back up BE. So the market conditions monitor will identify that, let's say there's a let's say a neutral or slightly bearish condition happening in the near term, but for a symbol that is strong, or vice versa. If it was weak, right, and weak in the intermediate time frame or weak in the short term, and then you look on the intraday, or in this case for a level 3 member on the 2-hour or the near term, you would, let's take the bullish case, that's something that's either neutral, slightly bearish. You can set an alert. So there is some number of alerts. I think you get like 50 or 75 that you can subscribe to in terms of alerts. You could set an alert in the near term for a specific symbol that you are looking for the opportunity to, say, go long in. You can set the alert so that when it goes into, even like these, so let's say that you were waiting for a pullback in XME, TAN, Chevron, I can set this to even slightly bullish or neutral or slightly bearish, okay? And then what's going to happen is I'm going to be notified when XME pulls back and the neutral or the near-term condition goes to one of those conditions. So if you have that near-term condition move to slightly bearish or neutral or slightly bullish, and then I can keep my eye on it and see, is this a new opportunity on the long side? Same thing for those that might be very bearish. If these were the condition overall was very bearish, and you're waiting for a move back into, let's say, neutral or slightly bullish, something like that, you could do that as an example. And then as they come into neutral, slightly bullish, you can pay attention to it. You could even set an alert then back to slightly bearish. The point is, just like over here, what you're trying to do is understand where are we, and then when's that next move, that next price move, the next swing starting. And if you're finding trending stocks, momentum plays that are not fighting each other in different time frames, unless you're looking for, as we just talked about, and if you didn't catch it earlier, Katie and I did a segment on option strategies, and we were talking about when you're in a choppy condition, how you can use strategies around that. But if you're looking at more trending opportunities, how you can, in that shorter time frame, pinpoint when you're, again, if you're looking at overall bullish condition, you want a neutral, slightly bearish, and then you're trying to time it for when it turns back up. So market conditions monitor helps with tracking. That's why we call it a monitor. It tracks the conditions, it tracks them in live time at multiple time frames. Very, very helpful. And then we also have our ranking system. So the ranking system, the difference between the ranking system and the market conditions monitor is this is not in live time. This is updated on a daily basis. It also includes our cycle analysis in it. So this adds another nuance or dimension into, or component into the overall outlook. The directional bias is not just purely momentum based. It also brings in some volatility. It's a part of our OBI formula. And then also we use the intermediate cycle information to help give us that intermediate bias. And then we pull it all together in one algorithm, and we give you an outlook for the next 3 to 6 weeks. And you can easily just sort here and look at symbols. So let's just look at a few of these here really quick. The top two, we got PAAS, PAS, and FES. So let's just look at PAS and show you what my process would be. I got to remove some of these drawings here so we can start fresh. So PAS look like it just hit a multi. I love these patterns. It's so fun to look at this stuff. But a new multi, which makes sense, right? Silver hit a new high. This is we have connected to the silver, and you have the minor. So it makes sense that it's going to be reflecting a similar kind of pattern. Let's just see what we have here really quick, and in terms of opportunities, how much is left. So when I try to evaluate the maturity of the move, I'm trying to understand how much is left in this move. And right now, RV is right. And he evaluated it in terms of silver being in more of a blow off. As he drew the trajectory of these moves, you get into these hyper trends, parabolic moves, where you can just see where the money is flowing. Whoops. And but I want to understand how much is left. So right now, I mean, there's some room here, right? But it's not a ton for me. So on a short-term outlook, you get a pop into around 40, and then I might see a pullback that happens. So I would draw from here. I mean, I'm speculating right now, but it might come back, somewhere back into the slim ribbon. But this is a key swing. So we've got a key swing right here. I'm going to do another draw to help me understand how much could be left in this one as well. So this is my process that I'm going to use, even though I have a directional bias, which right now is clearly bullish. That doesn't mean that I may not have a proper risk reward ratio, or how do I establish a proper risk reward ratio? And if I'm going to do that, I have to be mindful that there's some fib extension levels that are likely to attract some selling. So I would have to, for me, I would want to keep my stops tighter. So I'd probably be looking at these last 2 days of lows here. And if I'm going to look to be long in the short term, I want to make sure that my risk reward ratio is going to make sense. So that's how I use this to help set that up. But how I got here is because we have these tools like the ranking system that at in an instant, I can click on directional bias and I can get this awesome perspective of what's happening. And then again, if you are an option trader and you want to look at some more neutral based strategies to collect some premium on, there's nothing better than when the bulls and the bears are fighting each other. We always are, but when you really can see it in the indicators, those are great patterns. Or maybe there's a base forming and then there's this big breakout. So these are, there's so much nuance that you can gather by looking at our tools. And we always want to keep things right at your fingertips so you can click and see the weekly chart, the daily chart. Also, we had requests for people. They wanted to know, sort of a hub area for the information. So you got cycle low dates in here, even have cycle low counts. So if you're doing this, you're trying to practice on your own, maybe you've taken a workshop that's available, cycle analysis workshop that Slim put a couple of years into developing. You can see what those cycle bars are, and then you can draw them on there. So you can practice. But we give you that information and the key levels, where's that key support, and you can see, wow, I mean, this thing broke out in June and it hasn't stopped. And daily key levels, so super insightful information that you can use for actionable trade planning. All right, so there's the ranking system. I mean, as I said, level 3 is, I think, an active trader sort of dream in terms of technical analysis, trade ideas, education, and having a support team there really all the time in terms of being able to go to Discord, and if you have questions, to be able to support your membership experience. Cycle timing tools, we have a cycle low timing tracker, and that tracker is, Katie manages this, so you have 3 phases here. So again, we're trying to understand the maturity of a move. Where are we in the move? And when you get into that period of risk where you have a cycle, we call it the cycle low timing window, and this is an opportunity then to follow where is that symbol in reference to that cycle low timing period. Are we in that cycle low timing period? If yes, okay, which symbols? It looks like there's a lot of symbols in there right now. And then which ones are showing some bottom pending, which ones are bottom confirmed. That helps with anchoring your risk management, because if you're a strong if you're in a strong stock and we make a bottom pending, odds are that favor you're likely to hold that low. But in terms of proper risk management, you have an anchor to work with. Bottom confirmed, yes, the move is likely already started. But again, it doesn't mean it's over. It means that that move is now underway. So you can look at and you can see which symbols are more positive or negative. We have the green indicators that tell us that. And then Katie also indicates when there's the weekly, daily cycle timing is in sync. There's more opportunity and more risk when that happens. So a ton of information, great information here. And if you have questions, she has a Discord channel where she can assist you with those questions around the cycle low timing tracker. Markets are complex. You've got to have a complex methodology to deal with it. This isn't about trying to be we don't want to complicate anything. The goal is to uncomplicate it through having a complex methodology that can deal with all that's happening in the markets, and so that you can simplify it into a trade planning process. Ultimately, that's where you're trying to get to, is how do I convert the analysis into a decision-making process? Because you need to know, what's my outlook period, right? How long do I want to hold this trade? How much room do I have on the upside or downside in terms of potentially left in the move, so I can set up my reward risk ratio properly? There's, all these details that you want to have. When do I want to have my position sizing be larger versus smaller? What drives that? So we really put a lot of this together so that can help with that. Let's go back to level 3, timing tools, trade ideas. I talked about that. RV has a blog here that you can see on the site, and then he has an actual trade ideas area where he logs these trade ideas, and he has an incredible directional bias ratio in terms of when he positions a long or short, what are the odds that fulfills that directional bias? It's greater than like 70%. So you really are going to learn through Ask Slim and RV how to position your position bias or directional bias based on our tools and our method and our process, and that you can create your own. And then there's some My Trade planning areas where you can go and you can create your own trade ideas, track your own trade ideas. We essentially give you a template to work off of. You can work off of old templates that we have, or you can create a new template for yourself, step through a process. This is like batting practice. If you're a baseball player, or if you're a golfer, or if you're a musician, you obviously have to take a lot of reps, right? You've got to do a lot of practice, and it's going to take hours, and it's going to take hours. And this is a great way to be disciplined in a process. Do you have to do it every time? Well, I would definitely spend a few minutes for sure. Obviously, you got to do your analysis, but this puts your plan together, and you start to build really good habits when you're doing that. You're not just winging it. Now, if you've been in the markets for decades, yeah, there's a lot of you have instinct that you've built up over time, but this is still great practice. Even if you're 20, 30 years in, I think it's very smart to be aware of what your process looks like. Now, are you going to do this right before you enter a trade? No, this is something that as you're going through your work, as you're looking at your charts, you're setting yourself up so that when the time comes, you're ready to execute and you have a plan in place. Okay. I think I covered everything I wanted to in level 3. You can see how robust it is. It's a fantastic service. If you have questions on it, let me know. Otherwise, you can go to the top of the site and you can sign up for level 3. Or if you're a current member and you want to upgrade, you can do that as well. Just write to me or team@askslim.com. All right, now I'm going to spend a few minutes on the day trader service. We have upgraded, enhanced that over the last month or so. The day trader service comes with standalone applications, and then it also comes with 2 live, we call them cockpits. So those are going to be multiple intraday time frame setups, layouts that help with getting a sense of the overall, again, directional bias, what's happening in terms of the price action, whether we're in resistance zones, support zones, the directional bias, Are we looking at a condition currently that is positive? If so, is it in the, we look at a 15-minute chart, 8-minute, and then for our cockpit number 2, we have a futures grid, which it even gets down into the 3-minute for help with scalping, getting a directional bias for that scalper. So first, I'm just going to start with what are the standalone applications, and that is our first one is the impulse monitor, and I'll give you an example of how you can maximize this. So this is not a buy-sell indicator. This is designed to let you know if there is a larger directional move either starting to unfold or already happening. Okay. And with that, that can help you catch the larger moves or prevent you from getting run over by a larger move that might be unfolding. But it is not a buy sell indicator. When it turns positive, it doesn't necessarily mean that's your signal to go long, although at times it's going to catch that move. But really, it's more about a bigger picture sense of what is the condition. And then we have a what we call a Slim's 8-minute strategy. It's a combination of three components. And when they're in alignment, it goes green. When they're in misalignment or a conflict between the three, it goes yellow. And then if it's a positive alignment, it's green. If it's negative alignment, it's pink. So I'm going to show you what that looks like here in just a second, because I'll go into our strategy review area where you'll be able to see this. But this is live right now, and we have indexes, and we look at the SPY, the Qs, IWM, and DIA in terms of the ETFs that track those. And then there's also another set of about 20 symbols or so that we include in our day trader service. And this is going to help you find like what's on the move right now, like what could be breaking out into a new impulse. So you can sort on it, and you can see that Netflix is not only has a positive impulse right now, but also the turbo is on. So turbo is an indicator that's built within, is an algorithm that we have that's built within the broader algorithm of the impulse condition, helping to, now there's a couple more that just turned on to let us know when a new move within the impulse is likely happening. So what I'm going to do is I'm going to pull over my futures grid. And this is a live look at my futures grid. And the reason I'm pulling this over because we have established on the futures grid this awesome labeling. So this is proprietary code that we wrote that helps to reflect the dynamic changes in the market environment. And I'm going to look at, what was that? Netflix, NFLX really quick here. On the top, it's going to take a second to load up. Okay, yeah, so I can see here on the 3-minute, my reversal scout turned up. I have what I call my line in the sand, my trend indicator here, line in the sand trend indicator in the 3-minute. And you can see how we pulled back here. This has been more, positive on. We color code the candles. So the candles here, there's a little bit of a back and forth, but then we broke out above my line in the sand here. That's why it's that goldish brown color. We had a breakout here. That's the impulse monitor is picking up that we're in this larger move, and then we, very bullish here on the 3-minute. We monitor the SMI, so you can see when you have a new, and it's going to change the label. You can see here the NQ is falling right now, the SMI, but when it's rising, as soon as it shifts to rising mode, the label will shift and let you know. So this is super insightful. I mean, you got to have a sense of what's the directional bias, what's the current move. Is the move on the upside? Are we in an upside sort of rising phase move? Are we also just breaking out? So we have a breakout indicator that we built in here with this label here. Lets you know if you're choppy within the high-low range markers, and then when you're breaking out. So each one of these time frames has a different marker, obviously, because you have a 3-minute for your scalper. You have your minor outlook here for the intraday swing minor, and then you have your more major swing which is in the 15-minute. And it's really about like how many points am I looking for, right? So if I'm a scalper, I'm most likely, depending, I'm just going to use the ES as the example, but I might be looking for 2 to 6 points, somewhere around there. If you look at the history of the ES, it usually moves somewhere around, 3 to 6 points. 2 to 6 points is something that you could capture. I'm talking, again, this is intraday swing. I'm not talking about trading in seconds or just a minute. Might be 9 minutes, 10 minutes, might be up to 15, 20 minutes, somewhere around there. But then as you get beyond that, you're really getting into what's more of a minor swing, right? And that's where you're looking at somewhere between 6 and say 12 points, or 15 at a max when you're dealing with the minor swing. But then when you get into the major swing, you're looking for 15 to 25 points. So we have these tools to try to help us gauge what is the opportunity that's unfolding and be able to see it happen in live time. Like here, you can see on the 3-minute, we got above that line in the sand. And then our color, the candles start going green. Again, this is all about bringing the visual attention to what's happening. And that was, if you're a scalper, this was an opportunity on the long side. You could also see that the minor condition was positive at that time. So you want to be in alignment, right? That's going to give you your best and largest opportunities. If you're going to go counter trend, you want to keep your position sizing typically smaller and be prepared for that counter trend move to likely fail, right? I mean, that's the whole point, is if you're trending, you should see, if it's an uptrend, you're going to see higher highs, you're going to see higher lows. If you're downtrending, you're going to see lower highs and lower lows. So if you're going to go looking for a reversal play, there's nothing wrong with it, but make sure that you're focused on what's happening in that 3-minute, and then understand where you are relative to the other, larger time frames to get a sense of how far could this move go. We have a linear regression channels that we put in here, both on the 3-minute and also on the 15-minute. Those linear regressions are dynamic, so they're going to move, but they're going to give you a sense of where those ranges are. And you can see that in terms of the ES, we've been above the equilibrium line, which is usually a good sign of whether you have if you're bullish or bearish, right? Another one. So I'm always trying to, in an instant, understand what's my condition. So we've got several ways of indicating that, the condition and then the move. So the SMI is very helpful with where are we in terms of, are we in a rising mode? Are we in a falling, right, declining mode, or are we in a stalling mode? And right now we have rising mode in the major. We have rising, getting a little overextended, but that's strong in the minor. And we've been extended, screaming, and we got our trader radar telling us, watch out, this thing's been strong now for, a lot of minutes. It's been strong. So right now, we're getting up to the top end of the linear regression channel. We've reached the top end of the SMI. So this is where you have to start being more cautious is okay to say here. This, if I'm going to play another breakout, I have to be, if it's me, I'm going to be keeping my stops tighter because, I'm really reaching, more of an extreme part of a move that is occurring when it comes to that. So again, I got here because I'm looking at how I can use the impulse monitor. And if you have your own setups, you can use them to your advantage, the impulse monitor to your advantage, as it's shifting in live time to when things, when it's showing these impulse conditions, whether bullish or bearish, and when the moves are strong. So XLK, Meta, BABA, IWM, they're all right now showing a strong move to the upside. That doesn't mean, again, it's not a buy sell indicator. It just means that these moves are strong right now. So I can see the, breakout happening in the 3-minute, a breakout happening on the 1 hour, 2 hour marker that I have, getting above my line in the sand. So this could be a breakout move. There's a gap here that Bob might be trying to fill, and if I have access, to the grid, if it's, me, then I'm going to be drawing and say, okay, what are my levels? So I got a little bit of room here, 40 cents or so to my first target, and then my second target, and then my third target. and then I'm going to be monitoring, my line in the sand from a risk perspective. Then I do a quick reward risk ratio to see if I have a solid trade. Again, there's a lot of nuance built into these charts. This is our futures grid, but I wanted to show you how you can use the impulse monitor at an instant to be able to help you see what's really moving. Okay. And then you can flip this to right now. There's nothing there's one. USO is the only one right now that is showing a negative overall impulse condition. Again, this is not for determining the reversal. This is to tell you what's the move that is either starting to unfold or is already happening in terms of that overall impulse. All right, that's our standalone impulse monitor. And then also we have a market replay system. So you can go into the replay system and you can go date by date and you can look at screenshots. So we have a software program that takes screenshots all throughout the market session, and you can see how this works relative to the indicators, relative to maybe a strategy you want to look at, and you can go step by step, 5 minutes, and you can take a look at how this. So you can see here. So this is our cockpit number 1, and we have the impulse monitor on the left. We have our 8-minute chart set up on the middle, and then we have our roadmap. We call it our 15-minute roadmap on the right. And depending on your style of trading, again, you can use these all together. You can use just a combination of them. You can use these with the futures grid. How I use it with the futures grid is that I want to know where we are on the cash indexes in terms of are we in an acceleration zone, which are these yellow areas, which give a high probability you're going to move through it. You can see here when we opened up, we got through that acceleration zone, hit the first layer of resistance, and then started to pull back. And I'll fast forward this in a second. But that's how I use it is, okay, if I'm going to be long in the futures, I want to know what is the cash index looking like in terms of the key levels. So they play off of each other. You can see it happening all the time, how if the futures give way, when the cash index is going to give way, you're going to see a really nice move. And I don't want to be shorting the futures when I'm just moving into a potential acceleration zone. Or if I am going to do it, I'm absolutely going to have the smallest position size because there's a high probability that we're going to move through it. But I want to, I can use these in combination together, and you can toggle between both of them, cockpit 1, cockpit 2. But this is a replay system, so this is today's action, and you can see we got up through the acceleration zone for both the SPY or the SPX and NDX into a resistance level area, and then right? You can see that sellers come in. So that's why you got to know where you are in terms of the levels. And this is something that I manually craft in the morning before the market opens. I use our a proprietary swing high, swing low Fibonacci analysis along with some other tools to give me a sense of where these key levels are. And you can see how the market reacts to them. So here, this is at 9:31 Central Standard Time. We pulled back into some support. Let's see how that played out. All right. Oh, look at that. So the support, you had both the resistance. So we have choppy conditions right now, right? We had a move into resistance, got sold off, a move into support, and you can see the range that it was trading in. The buyers came in right there, and there was a chopping around. And we have 2 reversal scout indicators. You can see them. It's so cool how you can watch them sort of play out, and you can see so right there, we had a nice move higher, or the indicator shifted, and we got another move. Let's see if we can, and we're into that acceleration zone again, and there we go. So the probability when you have our reversal scouts in the direction of the acceleration zone is better than 70% that you're going to fulfill at least 50% of the zone. And it even it even, 60% or better, you fulfill the whole zone. Now, past performance there's no guarantee of future performance, but based on what has occurred in the past, when you have the reversal scouts in that same direction, there's a high probability of getting deep into these acceleration zones, if not fulfilling them. And once you enter them once, they become weaker. You know how that works in terms of resistance or support, the likelihood of getting through that again. People ask, well, what about going back the other way? Yeah, I mean, these are price voids. So, I mean, really you're focused, this is a focus on the upside opportunity. But yes, when you get into resistance zone, there's a likelihood of pullback. You could come right back into that, the acceleration zone. What I have witnessed is that these, what we call trigger lines here, this is your breakout trigger line. You'll watch that first for some support. But this was a, really choppy situation. Plus we got up near the top of the SMI level there, and then we pulled back pretty quickly. So this is the cockpit number 1, 8-minute grid. How do you use this in combination with the impulse monitor or with the reversal scouts here? What I'm doing is I'm trying to understand my bias first. So I'll look at the impulse monitor. I'll look at the reversal scouts. I'll look at the pattern. Obviously, just price tells you a lot as well. And then I want the shorter duration time frame to give me some signals. So if I go back in time here, we go back to right about here. So what am I seeing right here? This is really important. So you're seeing very quickly, there's a confluence of information that is supportive to the bullish case. I'm going to look at the NDX as the example. First of all, none of these are, although there is a impulse neutral, the slight negative bias, none of these are negative impulse condition. So if there was a negative impulse condition, I would not be looking to go long. If it's in a neutral, then I'm going to be looking more at a smaller position size. But I need to have the other indicators, the bias indicators, starting to tell me that there's logic to look at a long side opportunity. And then once I have other indicators supporting that, you can look to add some size to it. So right here, you have the reversal scout. There's 2 indicators. I have a reversal scout fast, which is this one, and then we call it slow. So when both of those are in the same direction, that increases the odds that that bias is in that direction. And since we had this pullback already, we weren't able to really see much of we had one test into that support, the next pullback and the next candle didn't violate that at all. So now the bulls come back in, and you can see on the SMI, it's starting to curl back up right there. So that's when you start looking at that potential for the long side, and then the impulse monitor turns on. So again, this is going to be, when it comes to what's going to be the first telltale sign, right? So if you're more of a, hey, I want to know which one of these indicators is going to help me from a reversal perspective. Well, you're going to be looking for what we call the signal line up here. Okay, so this one in terms of the minor, what are the minor signals? And then you want to look at the signal line. You're going to look at the reversal scout fast. So that's this one here. This green one here is telling you that it's happening in terms of a move. The impulse monitor is going to be slower to react against. It's not a reversal indicator. It's to let you know that there is a larger move now that is likely underway. You can see trader radar started to shift. We went from, this is interesting too, because trader radar gives you a lot of nuance, a lot of context. There was a dark red bearish candle bar that it picked up based on a combination of indicators that we have within the trader radar. And then we had a higher high that was made, and we went pink. So we went from bearish to slightly bearish. And then we get it turned green, right? So this is starting to let us know that the overall condition was more positive than negative. And then I would be using my futures grid to give me a feel for where are we, right? Even more context. So that's how I put it all together when using these tools in terms of cockpit 1, cockpit 2, each one of the indicators, very supportive in helping you. Again, first of all, it's bias. What's my bias? Where are we in terms of the move? Are we in a new rising move? And I can use the SMI to help me with that. And then also, where's the maturity of the move? So coming back to, the futures grid here, just a few minutes ago, I said that, we had to be more cautious, right? Because we were getting up into the overbought area of strong, but overbought on the 3-minute and also on the 8-minute. And you can see here that, we went into a chop mode, and it's identifying we're in a chop mode. It's identifying that it's neutral right now. And it's also identifying the SMI is falling. So if you are more of a momentum trader, I don't want to be looking to add a new long at the moment. I'd want to see so the reversal scout has gone negative, SMI's rolled over, trader radar is pink right now. I'd want to see a breakout in terms of price. And then I would also want to see the SMI maybe turn back up. But really, this was a more mature move, especially in the scalp and minor timeframes, where it started in force, like right here. Here was the meat of the move. We got above the line in the sand, reversal scout turns positive, SMI goes positive. That's your minor move. This is where you got to make your money. Right now, it's chopping around. Yes, there could be some left in here for sure. I'm not going to say there isn't, but I would definitely be keeping my stops tighter right now as I'm monitoring the risk, knowing where I am in this move. I'm not afraid to take another long side shot. It's just I have to be mindful of where I am, because we got the SMI in the 15-minute and the major still positive, right? So that move is still saying, hey, I'm still happening. We're overbought, but strong in the minor. So that could tell me if we get a breakout here, we could be another move could be underway. What would that look like? So I'm going to zoom back here. Let's see what I can find. Yeah, I mean, if there's not a whole lot here. If we hold this low, we could get a nice little run, right? So this is a important level right here, 66.90-ish. For this, for another scalp opportunity, I would call it. If we could hold that and break out, then, what am I looking for? I'm looking at a move, get up to this linear regression channel, the top end of that here. So that would be, we got a breakout here that could get us another, 4, 5, 6 points. But right now, it's telling me watch out, neutral bias, and I don't really have a signal on the upside. I'd want to see reversal scout turn back up. I'd want to see a breakout. Right now it's in chop mode. And or if I was going to be aggressive, I'd want to at least see price, right? So I want to see price tell me something. That would be my first signal. Then it would be reversal scout or SMI. And then also trader radar might give me a yellow or gray bar here to tell me, hey, we could see a transition occur. But right now I got a little warning coming up even on the trader radar. So overall, very bullish. But do I have a trade right now? If I was looking to enter, I don't. This isn't right now. I don't have one. If I was to be a scalper on the downside, right? So let's say I was like, hey, I want to trade. I would have to keep it small. My position size would be small because I'm fighting against what's currently bullish conditions and also a rising mode in the SMI. So my pullback would have to be, maybe you're coming down into the slim ribbon here. So you could look for a few points, right? Because you could get 3, 5, 6 points out of it. And we might get a little breakdown right here. But then I'd keep my stop right up here. If I was going to look to a scalp, downside scalp, short side scalp, I would keep my risk really, really tight on that, because I'm going against what the current dominant condition is. So that's how I'm using this all. It's just the information is now very clear. What is the condition? What is the state of the move? Are we rising move, and at what time frame? And then also, are we breaking out? Are we chopping? Are we breaking down? So you really can't get a whole lot more detailed in here. We've maximized as much of the real estate as we can. We have a huge resource area as well with the day trader service. And that's right here. I mean, there's webinars I've done, training videos that Slim has done. There's playbooks, glossaries, interpretation guides. I mean, you're going to have to put some time into it, right? But we've done everything we can to give you a comprehensive setup here so that you can really learn the nuances of intraday swing trading. So this isn't for seconds or just a couple minutes. If you're a scalper, we're looking at swings, right? So we're trying to identify what's the swing, what's the new swing that can happen. Those swings last several minutes. You might get into, even an hour in a minor move, and these could last several hours when you're talking about a major move that happened. Like this has been 15 minutes. If you're looking at the 15-minute, the SMI here, we're counting candles. You got 1, 2, 3, 4, 5, 6, 7 to that peak right there. We're talking an hour and a half at least for that move. But yeah, it's how you use these tools. We have all the resources, and you can connect with me on Discord if you got questions. There's a question regarding if you sign up for level 3. No, the day trader is a completely separate service. It's so you can get a discount on day trader, but it is not part of level 3. Level 3 is part of our core memberships, and we have a day trader service. There's been tremendous investment that went into establishing this day trader service, and we consider it to be completely separate from the other memberships. Right now, the special is, I think it's around $33 a month for the day trader service. So, I mean, you really can't beat it. I mean, you're talking about a handful of, depending on who you trade with, but I mean, commissions alone are you do enough trades, you're going to be paying $33 in commissions. This is going to help you be more mindful of the trades you're putting on. What's my bias? What is the mode that I'm in terms of the move? Is it rising? Is it falling? Is it stalling? Like right now, you can see the SMI is flattening out on that minor. And when we started this review, I said that we were getting into a more of a risk or cautious time frame in the 3-minute. That's why you use the 3-minute. It helps me gauge what do we got left. And we had a little divergence that occurred in that SMI too. You can see it. So as we tried to get up higher, momentum told us, oh, no, I don't have any more gas in the tank. Trader radar gave us a warning. SMI rolled over, and now we're having a little breakdown. So that would have been my scalp trade. Right now we're in a little breakdown. Could we get a little lower? Yes, but I'd be mindful of my trailing stop if I'm a scalper so that I don't give back my profit. And that's how it works. These are very sophisticated. These are very comprehensive. This is for serious traders. You're going to learn a ton, and you're going to learn from a professional team. So that's what we have today. Appreciate you hanging around. If you got questions, you can write to me. You can write to RV or Katie directly on Discord or email. And thanks for everyone for attending today's live event, and then the after show, which has been the tour of level 3 and level 4. All the best. Take care.